How's everyone doing out there? It's Darian Thomas with another episode of Keeping Real Estate Real, and I have a very special guest today, Miss Carrie Phillips.
I don't know if it deserved a triple very.
I consider it very special.
Thank you.
Let's go back a little bit of background. I was actually at GLVAR getting sworn in as a realtor, and you came to the class and introduced yourself and said that you were from Ohio. And like I said, the antlers perked up, and I knew I had to go introduce myself just because of that Ohio connection.
Midwestern people.
Exactly.
We're sort of a different breed, right?
We definitely are. We definitely stick together. And you work with RateWise Mortgage.
Mm-hmm.
Okay. If you want to just go ahead and just tell us a little bit just about yourself.
Well, I'm a mother of two and a wife for 20 years, and met my college sweetheart back in Hillsdale, Michigan, and right out of school started mortgages. That's what I've always done and known, and so that's 19 years ago.
Okay,
Mm-hmm.
Perfect. I will say you were pretty popular in the in the community. Every single person, just from whether it's title company or anything like that, I always, who's your preferred lender? And I said, I work with Carrie Phillips, and oh, really? And literally every single person I've talked to, and I've talked to quite a few, actually, every single person. So,
thank you out there.
Yeah,
Appreciate that.
You're doing, keep it up, because
Thank you.
I'm at least excited to say that we associate with him, and I'd love to do my business with you. But let's get into, just some quick questions. And like I said, I'm pretty excited about this, because in the last class we had, you introduced something that I had never heard of before, and it's a very unique program, and I think it's something that you guys will definitely enjoy. So first question is, explain the difference between someone being pre-qualified and being pre-approved.
We'll even take it a step further, and so let's talk about a qualification. So when a client is trying to qualify for a mortgage, they take an application with the mortgage lender, we run their credit, we tell them, okay, if you can prove what you just told me, and you've got the down payment, and your income is what it is on the application, then you should be able to qualify for $200,000 sales price. That's a pre-qual. We give that a 3 out of 5 star rating. It's a good start. But everything is verbally verified. If you remember my class, the keywords are verbally verified in the pre-qual.
Exactly.
So we encourage a client to go a step further to strengthen your offer. Because sellers, they know the difference. Listing agents, they know the difference between a pre-qual and somebody going a step further, improving their income, improving their assets. So we collect, at the next stage, we collect what we call the Big Five. And the Big Five are tax returns, 2 years W-2s, 30-day pay stubs, 2 months bank statements, and a signed authorization.
Okay.
That's proving clients' income and assets. That's another step further, but we at RateWise Mortgage, and this isn't I'm not trying to pitch RateWise, I'm just saying we have decided to go a step further with the whole qualification, because we wanted to be able for borrowers to be able to take that mortgage variable out. When a seller has a pre-qualification from a buyer and then they've got a cash offer, what typically is looked at first, right?
Yeah, the cash.
Cash, right? So, and that's because the seller's like, there's a mortgage involved, and it could fall out. Something with the client's finances could fail, right? So we go a step further, and when the client gets a conditional loan approval after they've turned in their Big Five, there are usually 10 or 12 different items: background checks of the borrower, letters of explanation from the borrower, proof of taxes, insurance on a home in Ohio or something, for example. We go a step further and clear all of those client conditions even before they get a contract in place. So literally all the conditions that have to do with the borrower can be signed off by underwriters. So literally you have an approval with only collateral items needed. We call COA, collateral only approval. And that tends to go neck and neck with the cash offer, possibly even a step above the cash offer, because a cash offer always feels like they're trying to get that deal because they feel like, we're giving cash, we should deserve something special. Well, I've got a COA with all the buyer stuff already signed off, and all that's needed is an appraisal and title work, stuff to do with the appraisal, and that buyer is offering what the market, what the comps say. So typically, possibly a little bit higher than a cash offer. So that is, we wanted to put our clients in the best possible strength in a negotiating situation. We feel that our COA, which again is exclusive to RateWise Mortgage, does just that.
Yeah. And that was, like I said in last class, when you explained that, I was...
Well, what were you surprised about, remember?
Yeah.
Remember you were like, what, 14 what?
Yeah, and actually you actually kind of answered the next question. I was actually explaining what a COA approval is, but yeah, let's talk about that. Remember I came in and I looked at I got the interview saying, here's what we're talking about in class, 14-day closed escrow. And I'm like, what?
You should have seen his face. His face was like this the whole time, like,
how is
like
this
the mouth
possible?
open. I wanted to be like, okay, ready to shut the mouth. I swear.
How is this even possible? I mean, like, the average is like 45 days, so the fact that you guys said 14 days, I was just, oh my goodness, I couldn't believe it. And
Well, as a real estate agent, what does that, I'm now going into teacher mode. What does that do for you and when you're negotiating with the seller? Does that give you a step up?
oh my goodness, does it give us a step up? I mean, not only does it that, it definitely strengthens the offer, and especially when I can go into an offer and explain to another agent,
Because you're going to need to explain it,
exactly,
because it's brand new.
Exactly,
Yep.
exactly.
Mhm.
What COA is and, how it pretty much just collateral, and our offer is very, very strong. I mean, it pretty much, like you said, it pretty much puts it at a cash offer, if not better. And, as an agent, it just makes my job so much easier. Because I know that, I can come in, we have a little bit of strength coming into the offer.
Not just a little bit.
Yes.
A whole
we
lot of
have
that.
a lot of strength coming into the offer, so.
Well, in a buyer, the risk is reduced for a buyer.
Mhm.
When you get into contract and all your stuff and background checks and all that junk that could come up, we call them mortgage bomb checks.
Mhm.
All of those bomb checks are signed off. The risk and the comfort, it creates for a borrower, even though they might not even know what that did in their comfort, because they're just going along and feeling the no stress.
Yeah.
And they're like, oh, this is normal. But if they were to go through another experience with another, with qualifying a different mortgage way, just doing a pre-qual and then having to do all the background checks and everything when you're in a timeline in contract, your earnest money's at risk and all these things, that's stressful.
Exactly.
If you get rid of all the stressors, client,
Yes.
I just hope the client just sits back and just
Yeah.
enjoys.
Oh, yeah.
Because that's what it's supposed to be like.
Yeah. Oh, yeah.
Yeah.
That seriously, 14 days is very quick. I mean, you're, signing. Yeah. I mean, it creeps up very quickly. So it almost feels like you just, turn in your earnest money and now you're signing your closing disclosures. It seems like, a couple days later. So,
Well,
and that's why it's very unique.
Yeah, it is unique, but I don't want to give a false sense of, our average close time takes about 30 days.
Mhm.
But when you get all the paperwork and the background check, it's done before contract. So it takes about 10 to 14 days to go through the pre-qual, go through conditional approval, go through COA approval. Then you get a contract and you can close 14 days later. So it's still the same amount of time for a consumer. However, all the risky stuff and all the uglier stuff is just done beforehand. So I always say to clients, you're gonna do it anyway.
True.
Just do it beforehand,
Very
right?
true. And it's actually good that you brought that up, and that's what I always stress to people and always encourage is talk to somebody before. If you talk to a lender before you actually even start the process, at least now you can go into it with a little bit of knowing what kind of knowing what you have, and it's to get the ball rolling, to get started versus, okay, this is the home that I like, this is, I absolutely love it, let's go see, if we qualify. I think coming in the back end, and like you said, getting a co-approval, I mean, you pretty much, you're there, the deal's almost, you just have to find, the home, because that you're pretty much, going to qualify.
Good. Well, I think it's, as industry professionals, we have a duty to instruct our client
Very true.
the timing and the process of the start of looking for a home to when they get the keys in hand. And if you had taken out a client before they were qualified, number one, you might not even be able to get into a house, right? And number two, imagine if you had clients that fell in love with a property, they were emotionally attached now to it, and then they got qualified and found out that they couldn't buy. I would think that the trust level for a client, because they're dependent on us,
Exactly.
right? We're the leaders, and if it's our job to say, you want to go house shopping? Awesome. Let's start first step, qualification.
Very true.
And I think people will appreciate that direction.
Yeah, and yeah, thank you for bringing that up. All right, what's the most common mistake you see someone make when trying to qualify for a loan?
Well, number one is just getting pre-qual.
Mhm.
Remember that verbal verification, and then taking that letter that says, I've verbally done this, and not gone a step further. That's a big mistake, because I've gotten it where a contract comes in and then we do a verification of employment and their income had write-offs, or they are commission buyers and they've only been commission buyers for 6 months and we needed 2 years. So going further than a pre-qual is something that can avoid an issue. Another thing that I've seen clients do is they go out and purchase things like open a new installment loan.
Okay.
After they qualify.
Okay.
They go and buy a car or change their debt to income ratio in some way that was not part of their original qualification. Then I've also seen it where clients, they deposit cash into their bank accounts, and they use cash as earnest money. That's another big
Really?
mistake, because cash is not sourceable. In the mortgage world, you have to source and prove assets.
Wow.
So
Something, I learn something new every single time
Yeah.
I talk to you. So I'm
he's been to
glad.
my class like 3 times, so he's my star pupil here.
Every single time I learn something new. And all right, let's last question. Now, we kind of talked about it a little bit, just kind of like you said, go a little bit more in depth. Now, would you say it's important to talk to a loan officer before going out with a realtor and looking at homes?
It's the only way. We spoke about it briefly, but it's really the only way. It's about preparation. It's about minimizing risk. It's about being smart about the biggest purchase of one's life,
Exactly.
typically. And it's preparation. You'll know your payment, and you'll know what you're getting into before you get into
Exactly.
it, right?
Exactly.
And start risking
Exactly.
money and emotions and all those things. So it's the only way.
Yeah.
So.
And it's actually a good point, that you bring that up too, is because, sometimes I'll have people, very excited and very, hey, we want to go look. I have to kind of bring them back. And like I said, you guys have that great program to where, I can just plug in their information and just set a time, and you guys make that phone call.
What happened last night that I was impressed with, sort of,
So last night, I'm a night owl. I don't go to sleep until the Lord knows when. And anyway, I had somebody who contacted me and said, hey, I'll have somebody reach out to you. And he said, okay, well, I wake up at 8, can you have them contact me at 9? So I'm like, okay, perfect. Now, mind you, I'm a night owl. So I'm really not functioning until about 9:30 anyway. So anyway, I get here and I just, hey, did you guys have a call?
Well, they needed to be called at 8, and I forgot this, but our loan officer starts at 7 a.m. and then we go until 6. So that lead came in last night. It was sent over to Ryan Stevenson, and he had already called the client at 8, and you'll get status later today.
And that's,
so.
And to be honest, as a realtor, it is absolutely amazing to have that peace of mind, knowing that I can tell a client something and
it
follow
happens?
exactly.
Oh, okay.
We're in the world now where sometimes you tell people stuff and it doesn't happen, but so it's been a great. I'm very, very happy with everything, and I'm excited, and
You're
thank
gonna
you
do
so
awesome.
much.
If
so
you've got
much
him
for-
as an agent, he's a hard worker. He's a listener. He's a learner. You're a doer. I want you to represent me.
I
So
appreciate that.
stick to this guy. I'm telling you, it's good. In 18 years, I can see goods.
Well, like you said, Darian Thomas, Realty 1 keep the real estate real. Thank you guys for watching. Really appreciate it, and hopefully you got some knowledge. Don't forget Gary Phillips, RateWise Mortgage. Definitely, I'll put her information on this video, and if you have any questions on anything, feel free to reach out to her, me, her for the mortgage questions, me more for the real estate questions, and thank you guys for watching again.